Okay, Module 5, Problem 3 asks us to look at this balance sheet and prepare a corrected balance sheet. Well, this is where I need to remind you of the mnemonic device we talked about, CS-RIP. Cash, marketable securities, receivables, inventories, and prepaids. The other thing I have to remind you is that we are functioning under US GAAP, not IFRS, so you never write up an asset in your own holdings. So, first thing we have to look at here is we have some things out of order. Cash should be the first thing on our account. That needs to be number one. Okay, followed by marketable securities, and we're going to find out that that's really two pieces. We're going to have to break that up. Then we have accounts receivable. Then we have our inventories. And then we have prepaids if we have any, and we don't, and that's our current assets. After our current assets, then we have investments. So we have piece of this, and we have a piece of land that's held for sale. And then we have our long-term assets, our property, plant, and equipment, and they go in the order of, that's PP&E 1, and then buildings are PP&E 2, and machinery is PP&E 3. And then we have accumulated depreciation, which they're carrying down here. And that's okay under IFRS, but under US GAAP, it needs to go up there. So there's the corrections that we have to make. And then we have intangible assets after that, and we have to put that in, and that's these. And they are correctly listed at net. So they're the major errors that we have to deal with. Plus, there's some other things we have to look at here. The buildings, land, and machinery are all stated at cost, except for a parcel of land that they are holding for future sale. That land costs $66,000, but they're carrying it at $152,000. Well, no, you can't do that. Okay, so we have to figure out what they did, and then we have to reduce retained earnings by whatever it is they increased it by. So they tell us the land $298. So we'll start with that. Now, from that, we're going to take out the $66,000 for the land that's held for sale. We're going to take that out. That's $66,000. So that brings us down to $232,000. Okay. So we're that far so far, and we know that the land that we're carrying is at $152, because they tell us that. Okay, and we need to find out what was the illegal increase. So it was 66. We marked it up to 152. That's an increase of $86,000. That's illegal. That's not US GAAP. So we need to subtract the illegal markup of $86,000. And we come up with the land valued at $146,000. So that's what's going to go into the land account. So it's going to go from 298 to 146. Plus that 66 that we have for sale. So we had to do that piece. Now we're told that this 86,000 was plugged to retained earnings. Well, we have to go find our retained earnings, 474, and take out that 86. Shouldn't have put it there in the first place. We got to take that out. So when we do that, our new retained earnings balance comes to 388. That's where it should have been all along. Now let's see what else it tells us. The marketable equity securities consist of stocks and other corporations that are recorded at cost at 36. Good, they didn't screw that up. And which will be sold in the coming year. The remainder will be held indefinitely. So let's see what we're carrying our investments at. We're carrying investments at 92. So we have 92 minus the 36 that we're going to sell right now. So that gives us 56 that are investments, and the 36 that we're going to sell right now, we're going to carry that as securities, marketable securities, 56. This piece is investment. This is short term, current. So we had to break out that piece. We got that. The notes are all long term. However, one note has a $65,000 payment due. So our notes payable, when we look at that, are $532,000. $532,000 minus the 65 that's got to be short-term or current liabilities makes the long-term notes 467. We need that piece. And the last one is the inventories are recorded at current resale value, which means that this firm is clearly run by nitwits, morons, and nincompoops. You would never carry inventory at the sale value. We bring them back to the original cost of 176, and we just retake the inventories. Where do those nitwits have it? Goes to 176. So when we redo it, the first thing we have to do is we have to reorder it, and that's the CS RIP. Okay, so there's our current section, and we have our cash, marketable securities, accounts receivable, inventories, CS RIP. We have no prepaids, so we have to plug those numbers in. And when we do that, and I'm just going back to that sheet where we worked and just grabbing the numbers, just putting them in the corrected order. Okay, we have our cash of 76,000. We have our marketable securities, that 36,000 that we're going to sell. We have our accounts receivable at 152. We have our inventories at what we paid for them, not what we hope to sell them for. And that gives us all of our current assets, and that totals $440,000. Okay. Then we have the marketable securities that we're holding, that's an investment, that's 56,000. And the land that we're holding out for sale, that's also an investment. That's 66,000. So our total investments are 122,000. And then we have our property, plant, and equipment, and we had to readjust this a little bit. The land, we had to undo all that nonsense they did at 146. buildings we're just carrying over from the original, okay? And the machinery at 296, and now we give us a subtotal, 1,208,000. Now we take out our accumulated depreciation. We do not treat it as a liability. The problem with treating it as a liability is it will give you the correct answer. It just is wrong. It's just bad form. And then we have our intangible assets of a patent. So we have a patent, intangibles, that's next. And the patent is 116,000, and again, that's just grabbing that number off the sheet, 116, it's right there, okay? 116. So our total assets is 1,615,000. That's our total assets. Now we need to just go through and bring in our corrected accounts, our corrected liabilities. Excuse me, I said receivables, I didn't mean that. So we bring in the corrected payables. And accounts payable, it gives 231. And they give us the current portion. Remember, we had to figure out how much of those notes were going to be paid now. 65,000, that makes it a current liability. So our total current liabilities are 296,000. Our long-term liabilities is 467, because you remember we recharacterized 65,000 to current. And our common stock, I think we just picked that up off of here. 116,000 shares, $464. Or 464,000, obviously, excuse me. And our corrected retained earnings of 388. So that gives us our total equity of 852. And we have our notes payable of 467 and our total current liabilities, and we add those together, we come up with $1,615,000. It does indeed balance. Let me show you the finished problem in the printed out form so you don't have to try to scramble to read my scrawled numbers. That's the current portion of the balance sheet. That's sort of page 1 of it. And there's page 2 of it. And at the bottom, I've got my explanations. I'll zoom out a little bit. You may have to take a little closer look at that. But it's there for you to refresh your memory. Good problem. You have to do some thinking, and you have to know what pieces are correct, what pieces are not correct.